All right, welcome back, guys. Alibaba stock update technicals today. So far, it's down 9.8%, 10% give or take, trading at 145.60. So they reported earnings last night and forecast slower on consumption. They said tough competition out there, and they cut the revenue guidance for 2022. And they also said that they lost, pretty much they lowered profit due to investment losses. So basically, we knew that all that regulatory crackdown would affect their earnings, and they kept pushing their earnings as well. And I mean, that at that point, you could have predicted that, okay, they don't have much nice things to say about. But where we go from here now? So let's have a look at the daily chart. So basically, I'll just take a look at the technicals from here. All right. I don't have a position in this stock. I'm not biased up or down. All right. And we have talked about this many times. So yesterday it was sitting at 50-day moving average. So basically this whole move from 138, I think it took off to 180. And then we almost giving back now 90% of those gains. So we were sitting at 50-day SMA. So that was the support I was watching. So on my screen, that's a yellow line right here. Yesterday stopped right at that 161.32. Now, if it goes up, that's the gap it needs to fill. So from 160 basically to 146. All right, that's the resistance I would watch, and maybe even 150. I was hoping that 150 would be as a support, but slipped below through this level as well. Maybe a little bit of a resistance we will have at 150, but 138.41, that 138 basically, that's the support I would watch. And also, even if that doesn't hold, from 2018 and 2019, let me bring up the 5-year chart here. This is a weekly chart. And for the past 5 years, you can see the lows in 2018, 2017 was 130, all right? And it has done this move back then as well. Look, let's measure this drop. That year, how much it dropped. So from $211 levels, this stock dropped to 130. And that was 38% drop from its highs. All right, so it has done it. It has never had, I think, this smooth sailing. If I switch to a yearly chart, let's take a look at the yearly chart. What's going on with that? So every candle here represents 1 year of price action. All right, and this last one, this 2021, and let's measure this drop. How far this stock is down from year open now. All right, so in 2017, looks like it was down. 2018 actually, 38%. But this year so far, from the open, okay, I'm not measuring it from the highs, 36%. All right. So will it bounce next year from there? Well, the only thing I liked about their earnings report is that they're still expanding their cloud business. That's what I like. That's where the money comes from. I'm not too into their retail. I mean, I think their retail, they said almost 80% of their retail, maybe even 83% of their retail sales come from China, and everything else from outside of the world. They own AliExpress, and they have other stuff except from Alibaba website that they own, and they said that about 20% outside of the world sales. So in that sense, well, they can expand their retail side, but I like that cloud business is doing well. But again, the regulatory stuff, I mean, there's no way it wouldn't have impacted them. So these are the levels I'm watching basically, and I'm not even going to, maybe I'll take a look at the option activity. Let's have a look at it, just the stats, because it hasn't been, it has only been 2 hours since market opened. So I'll just take a look at the stats, what's going on with the call and put volume. 309,000 calls, 171,000 puts. So slightly more call activity, but when stocks are down 10% or more, you don't want to try to catch that type of a move for very first day. All right. So, and also implied volatility is high. So you want to, if you're trading options, you want to let IV drop. All right. So these are the levels I'm watching. Basically, there's not much to say about the stock. We know it has been in a bear market, still in a bear market, still in a downtrend apparently. So we'll see what happens. Take care. Peace.